This is the Mortgage Breakdown.
All right, welcome to episode 9 of the Mortgage Breakdown with your hosts, Andy Clarkson and Andy Baker over there. We have a special guest. His name's Alistair Lynch from Farm Bureau Insurance. He's going to break down mortgage and then also homeowners insurance, everything that goes into different types of insurance too. Andy Baker, how do you want to start off this episode?
Yeah, well, first, just thanks, Al. You are our first official guest on the Mortgage Breakdown, so you should feel pretty honored, that we came to you with this.
I hope I received something in the mail as a thank you for honorary guest.
Yep.
Thanks for having me. You guys are fun to watch, and I appreciate you having me here.
Yeah, no, it's been fun. Obviously, everybody's still under the stay-at-home quarantine, so we're trying to kick around some ideas, and we thought of you, and thought it'd be a great topic. And obviously, what else does everybody have to do right now than sit around the house? So might as well put out some content here. But again, yeah, we really appreciate you coming on. And obviously, you're at Farm Bureau. You do home, life, auto insurance, all types of things. Specifically with homeowners insurance, maybe you can kind of just run down kind of like what's your like your kind of wish list or request list, like when someone comes to you and says, "Hey, Lynch, I'm buying this house. This is what I need. What do you need?" Our borrowers or from lenders specifically?
Well, it's kind of interesting with technology. We don't need as much as you think, but sometimes it's nice to get as much detail as we can from all parties. But from the home buyer, really just the acknowledgement that we can move forward with a quote usually opens the gates to communication of sometimes we'll be fast paced and the lender can provide a lot of the information we need with the customer's permission. But the reality is all insurance companies, they have basically an insurance score, right? And so when you look at an insurance score, it's not credit, but there's a metric of 16, 17 things that they look at. And your date of birth, your name, your social security number is kind of how we start the process. Past that, we use BS&A, government software, to just kind of double check what you're getting taxed on. That above grade square footage is where we head to try and make sure we're accurate on the replacement cost of the home. One of the things that can pop up a lot for us is in a good market like Rockford, where I live, home values are a little, I don't want to say overinflated, but they're higher than traditional, and we can still build a house for less than maybe what you buy one for. So we have to run by a certain rule book. So we look to the government software to try and get our accurate information to start process. Past that, a lot of things kind of follow in suit, unless when you're dealing with the mortgage process, it can sometimes get fast. So we try and keep it simple. As you know, it's a competitive market right now. So for us, we get that basic contact info and do a little homework on a few different websites, and off we go to the races. So part of our journey today, hopefully.
Alistair, that's a good point that you bring up there. I know that you're known in the community as a person that works really well with loan officers and real estate agents. Are you, or how important is it to you to track market trends and home values, sales, all that kind of stuff? Is there importance there for you?
There is to some level. I think when we look at insurance, the main goal of an insurance policy is to restore you to the way you were the day before a loss. So I'll talk about, if you guys don't care, I bought it in '08. It was bank owned. It was a foreclosure victim. I paid $180,000 for it. Today it's worth $350,000. My replacement cost has always been about $250,000 to $260,000. Insurance companies, we don't insure land. No insurance company does. So depending on the location of the property, that can change how we look at market trends. How I work within real estate and lending, to that topic, is I've offered it up to many realtors. If you're taking somebody out to shop for a home, I've always offered up a first-time home buyer some tips of maybe areas not to shop or areas to shop, not based on social trends, but just based on if you bought an old colonial house in an old your replacement cost could be 600,000-700,000 on an old home, where maybe that client might be a better fit for a manufactured home out in the country. And sometimes I see a lot of people go on these adventures where they don't think about market trends when it comes to insurance. And so we try and be a resource to say, hey, if you're out shopping, hit us up. We'll quote you 10 different properties, and we don't mind taking that extra time, because if you run somebody all over town and they can't qualify for a home loan because of a debt to income ratio because of our premiums, we'd feel bad if people didn't have that intel. So I look at market trends to be a resource as well for people to, if I do a lot of home insurance based on mortgage referral, I can see where markets are hot just based on activity. Like Wyoming seemed to be a hot market last year, and now Walker seems to be a real active area. And so as you look at different communities, that market trend is important for me, just to be knowledgeable to my referral sources.
So thanks for answering that question. Another question I have that's kind of, current, obviously that we're in the stay-at-home orders, state of Michigan, a lot of other states have been following suit. In the insurance business right now, have you had customers reach out to you with anything, temporary layoff wise, or are you seeing any questions like that come up right now?
It did just start this week, where I did have a few clients reach out, and our company is trying to do as best it can to help defer premiums for a couple months. And, obviously we know, but putting things off is not always a good thing. If I joked with one of my buddies yesterday, I said, grab an Afghan, turn down the heat and pay your bills, right? But it's easier said than done. Right. But we will work with clients, and, it's unfortunate. I do commercial insurance as well, and I have a couple of restaurants I insure, and they were the first ones to call about business interruption coverage. And, unless the power lines are down from a storm or things like that, or the government shuts off power, things like that, there's no one's ever had a clause in an insurance policy for COVID. So we've been instructing our clients to best records as they can, to try and turn in a claim that we know will probably be denied. But then if the government is going to support them, we feel like they'll be really prepared and organized to maybe get restitution as fast as possible now. And then we don't know how long it'll last, right? So we're going to be as adaptive as possible. We know it's important that people have insurance. We're essential, and we don't want them to lose their house, and we don't want them to have a bad day and not have insurance in place. So we'll do everything we can to help them. What are you guys seeing in your world?
Yeah, same kind of thing. I mean, obviously, Fannie and Freddie came out, a couple weeks ago now when this will air, but, with the lax in verifying employment, things like that. But obviously, that's the hard thing, is you still have to show ability to repay. So, like a lot of our restaurant people were saying, when do you anticipate being back open? And we still have a job. It's kind of the sad truth of it. It's I don't want to put somebody in a loan that they're not going to be able to afford if they don't have a job to go back to. It's not always what they want to hear, but sometimes it's the harsh truth. So
yeah, absolutely. If we get to the point where we don't have a resource that someone might be looking for, we could adjust them. We've had some people put some vehicles in storage that they might not be driving. We've had people raise their deductibles for a bill that said, hey, I can probably pay this, but if I could get it any cheaper for a short time, maybe we raise deductibles up for a little bit. So that's a chance they're willing to take versus non-payment. I've seen one unfortunate thing for me is I've seen on social media people a bit renegade saying, don't pay any of your bills, the government's going to take care of you. And I've seen what one missed payment can do on a home loan to your credit, right? So it, not personally, but I just seen, that can be a long-term damage. So we're going to be as best we can to make sure people survive.
Yeah, that's been our message too, is that even for borrowers that have current loans, there's some sort of relief available, but at the same time, the relief, if you can still make your payment, because you're going to end up paying that payment at a later date, plus any fees that are incurred in interest. And again, like you said, it could also affect your credit, because even with the repercussions of, negatively impacted credit due to this pandemic, yes, there may be some relief, but it's not going to be now. It's not going to be for months and months and months down the line. And it's going to take a lot of time for that consumer to take something like that off a credit report if it even does come about. So, yeah, Andy, go ahead.
One thing that I was interested in was I noticed General Motors had put out, and Ford did too, I believe, something about buy a vehicle now, defer payments for 3-4 months. And I wasn't sure if the typical journey of a refinance could provide an unintended relief in a way, because I know sometimes you skip a few payments before the next one's due. And I don't know if you've seen people try and use strategies like that in your world. It was something on my mind.
But that's, I think, just more of a side effect that's happening, and people are really focused on, saving 1 point, 1.5 points in some cases. It's crazy. There's some people still with 5% interest rates that never got around to refinancing. So,
oh wow, well, good for you guys, right?
Yeah, absolutely. Andy has a great question for you in terms of homeowners coverage that we were talking about before, and how it relates to lenders and what they ask for. Andy, go ahead and throw that one up to Alistair.
Yeah, it's just something that's always kind of interested me, and I know Al and I have talked about this in the past before too. It's just like, so our rule of thumb has always been, hey, you got to get enough coverage for the loan amount. And we've had cases where, the insurance company comes back and says, hey, we can't insure that high, based on our calculations or whatever, like you're saying, this is where we can insure to. Can you speak a little to that, Alistair?
Yeah, some of it kind of starts from a legal background, where we have a coverage called guaranteed replacement cost, and it says no matter what, we rebuild a home to a certain level based on the coverage we set in force. And it's illegal for us to have somebody financially benefit from an insurance claim. And so that's the main starting point for why we don't really let it just be, kind of a white dry erase board on what we're going to cover a home for. So back a little bit to how we start gathering information for a quote. We go to BSA, we look at some of the data there, and lakefront homes are the best example of that. I looked at one this morning. I allegedly may have shared some of that info around the room before our call, so you guys would know what I was talking about. But I have a colleague who's got a home listed on a lake in Rockford, and the sale price of the home is $535,000. And I did the research for what I would insure that for. It's a 1978 ranch home with a walkout. At best, I give it 2 kitchens as the only extra special features it may have. And I came up with a $323,000 replacement cost. When I went to the internet to kind of see a few more details, Redfin had the square footage listed at 2,400, and it's a 1,700 square foot home. So there alone is an area where you can sometimes see some discrepancies. But the reality is, when I go to say and I look at the land value, they said 140,000 was the land value on there. And so when we have discrepancy underwriting within the mortgage process, I love and add as much detail as I can to say, hey, we don't insure land. I had a mobile home on Lake Michigan 2 years ago. It was worth $60,000, and I had a lender incessant that I was going to give him $1 million insurance policy. And so for us, sometimes we try and just be respectful of the grind that an underwriter has to go through to put everything together for a loan. But at the same time, the lakefront properties are always accentuate this discussion in that we don't follow market trends. I know that in our world, we have access to things a little differently than the home buyer. So you look at the cost of, if let's say a home blew away in a windstorm, we're probably not going to have to put in a driveway. We're probably not going to have to put in a well and septic. We're probably not going to have to put grass seed and irrigation in. And you think about if you bought a home from a builder that was complete, really there's a lot of aspects that might not have to take into consideration. And then as well, the land value. So once we do that process with underwriting, it sometimes clears up that gap. But I've had times where we've probably lost business where I just couldn't close it. And I don't know, how do you guys make sure that the loan stands on its own 2 feet in that area?
Yeah, I've done it in the past before where I get information from you guys and then, just basically note the file that says, the insurance company ran their calculations and this is the most that they're able to insure this property for. And then a lot of times, it is, working with the numbers and seeing where we're at, that we do have, I like the guaranteed replacement cost. That puts a lot of people's minds at ease, that, even if this thing blows away or gets burned down, it's still going to get actually rebuilt, and we're still going to have collateral there to, have a mortgage on. So
absolutely. Well, and the other aspect of it too is we don't want a client to spend more money on their insurance than they have to just to suffice alone. So we do our best to just give as much ammo as we can to you guys, and a common sense backstory that hopefully we get them all to the finish line.
Right.
Alistair, got one final question for you too. Kind of an important one, for consumers out there when they're shopping for homeowners insurance. I think that the insurance business is a lot like real estate and the mortgage industry, and that you have, these producers that are driving the business through their doors, that are making connections with other, business partners to get referrals and all that kind of stuff, right? Yeah. As a consumer though, what would you say, I guess, is like the most important thing to do, if, considering, actually, when you're going through the home buying process and considering different insurance companies or agents? I mean, is it more about the agent? Is it more about the company? A mixture of the two?
Yeah, definitely a mixture of the two. My passion for what I do is, it comes from, I like to help people, but I've been the first one in the door behind the fire marshal after a house fire. I've handed a $250,000 checkbook over to a widow that just lost her husband. And so we know that we can change people's lives. And so for me, I don't care about price. At the end of the day, if it doesn't do what it's supposed to do, price doesn't matter. But that seems to be the first reason we get contacted. When I look at an insurance policy, I joke with people and I tell them, like, I don't care if you lose your wedding ring down the sink and it's not covered. I care when Sammy Bernstein comes and knocks on the door and says, "We take your house because your kid hit some lady on the sidewalk with his bike," that you don't lose your home and you don't lose everything you've worked for. So for me, when I look to an insurance policy, I think there's a lot of great insurance agencies in our area and across the U.S. I want to know my agent, though. I mean, I joke with people too in this area. I said, I know when I get 5 text messages in a row on a Sunday night, they're probably not calling to tell me that their rates are probably going to go down, right? So a relationship's important, but there's some great companies out there. We don't like to pick on companies that don't do it the same way we do, but I think high liability coverage as well as accuracy and the replacement cost of the home are my 2 first things I think of. If people want to save money, I look at deductibles and other things, but the state of Michigan gives you a rating, and that's one of the biggest goals of an insurance agency, is to maintain their rating. Well, how do they do that? They insure people that do the right things. They look at so many factors on how we get our rating, that when we have a high rating, we plug in your information and that equals your rate. So the company, the client, and then a general relationship with the agent kind of creates this melting pot of information that really makes me want to pick an agent, as long as the coverages are appropriate. So price does matter. Obviously, we don't want to spend more money than we need to, but just understanding why something's cheaper. Like, people always say, well, how come Farm Bureau was $500 cheaper than this other company? Well, we might have a better rating with the state, and we might like 50-year-olds in this zip code based on actuarial data. I mean, it's not profiling, but there's a lot of research that goes into losses, and so that's why you'll see rates be higher in certain spots than others. There might be more car deer accidents. There might be more tendency for damage from Mother Nature in certain areas along the lakeshore. So there's so much data that goes into it. It's hard to be dialed in specifically to one spot. But for us, as a summary, if I'm picking an insurance agent or an agency, it's always nice to have somebody say they've done a good job for me. So it seems the way we do business in West Michigan. But at the same time, one size doesn't fit all. So I don't mind when people get a couple different quotes. And I always offer it to people to come back to us and say, hey, if you're looking around, you're going to shop your rates, bring everything back to me. And if somebody else that I trust and like in the area is going to be better than me at something, I'll high five you and send you on your way if price is your main focus. So, but yeah, it's, I don't even know how to describe it sometimes. It just, the insurance industry is unique, and it factors in so much data. It's hard to say there's a one size.
No, I think you said it perfectly, and I love your why. I think it's why you're so successful and have so many great relationships here in West Michigan. Andy Baker, anything to add before we sign off, sir?
No, again, just Alistair, thank you for taking the time to do this. We appreciate it. It's been good information. Hope everybody's staying safe, staying healthy. Wash your hands.
Why? What's going on out there? Is there something going on? Thanks for having me.
You're welcome. That's episode 9 of the Mortgage Breakdown. Please like, share this video.
Thank you for listening to this week's episode. Tune in for more breakdowns.